Hi, I'm Rick Kahler. Thanks for joining me. Well, it's impossible for a financial columnist to please all of the readers all the time. My recent column criticizing the Be Your Own Banker scheme in the Rapid City Journal drew the ire of several fans of whole life insurance. Two of them in particular, whose responses were published in the journal, disparaged my integrity, my professional qualifications, and my math skills. Outside of that, they thought I was pretty good. Now, part of the problem is that these readers interpreted my warning about the Be Your Own Bank, which I called one step from being a scam, as an attack on whole life insurance in general. That wasn't the case. While admittedly I'm not a fan of whole life as an investment, the purpose of life insurance is not to provide retirement income or cash value, but to replace income when someone dies. For most people, the best and the cheapest way to do this is through term life insurance. Obviously, someone who sells insurance will have a different opinion about that. The insurance agent who tried to show that my math didn't add up accused me of misrepresenting a modified endowment contract called an MEC. He wrote that no insurance professional using what he called the banking concept would ever sell an MEC. Well, guess what? He's right. Just to clarify what an MEC is, an MEC is a classification under the 1988 federal tax law that is intended to limit the use of life insurance policies as tax-advantaged investments. If the cumulative premium payments exceed a certain amount, the IRS says the policy is an MEC. This means withdrawals from the cash value are taxed as ordinary income and subject to a penalty. Now, what the BYOB people promote are not MECs. They're blended whole life policies. These combine term and whole life in order to keep the policies from qualifying as an MEC. The calculations presented in my article are actual numbers taken from a blended whole life policy sold by a BYOB promoter. That's simply why they didn't add up when viewed through the lens of an MEC. So is blended whole life, is that ever a worthwhile option? Well, like any insurance product, there are certain situations where they make perfect sense when they are represented honestly and transparently, which is one of my big gripes with the BYOB people. But you should remember that anyone considering any type of insurance policy needs to know a couple things. First, insurance agents are compensated by commissions on products they sell. They have no fiduciary responsibility to act in the best interest of their customer. Second, whole life insurance pays some of the highest commissions of any financial product on the planet. The typical commission ranges from 55 to 200% of the first year's premium. Now, with numbers like this, it's pretty easy to see how insurance agents might feel challenged by any criticism of life insurance. As a fee-only financial planner, if I discovered that a particular type of whole life insurance isn't good for consumers, that simply is useful information to pass on to my clients. The problem is that the same discovery for a commissioned insurance agent is a potential threat to that agent's livelihood. They just simply can't pass on, by the way, this stuff's terrible, don't buy it. Even with these tempting commission rates, there are many legitimate life insurance professionals whose intent is to serve customers rather than exploit them. These honest agents do best to sell products that they believe will promote the consumer's financial well-being. Comparing whole life insurance sold by reputable agents to the schemes pushed by the BYOB sellers is like comparing apples to, well, rotten apples. It's too bad that more insurance professionals are not stepping up to protect their industry from the rotten apples engaged in this type of shady marketing. Numerous honest life insurance people would agree that the BYOB spin is not only harmful to consumers, it's also hurting the life insurance industry as a whole. Thanks for joining me.